All of it takes us to our talk of the tape. What it will take to keep stocks moving even higher from here.
I think 2024 is revealing the stock market is getting stronger.
Wow, I mean, really to the moon here for this.
It's all marketing. It's all PR. It's a fiction. Just like that place. There's not supposed to be any artisanal mining there. It's all done industrially. That's the story told at the top of the chain. And people assume, I mean the marketing teams at big tech and EV companies assume, well, who's going to go down there?
I think
Wow, I mean, really to the moon here.
This is one hell of a first video. When I first sat down to write this script, I initially wanted to give you a high-level understanding on why the rich get richer. It began and ended with, well, they have greater access to capital and the connections combined with knowledge to deploy it and generate wealth. However, as I dug deeper, I began to see the threads which connected everything. I quickly realized this rabbit hole went deep, way deep. Also, the problem was old, really old. As a result, we landed here. Why the rich get richer, how capitalism really works. My name's Mark, and welcome to Evergreen. We provide deep dives into the world of finance, economics, and business, empowering you with the knowledge to take control of your financial future. Now tap in, and I'll explain.
There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every time.
Western capitalism at its core is an economic system where private ownership and the pursuit of profit guide production, distribution, and the exchange of goods and services. This private ownership ranges from businesses, estates, to property. Central to this system is, well, capital, money used to invest in ventures with the aim of generating more wealth. Capitalism gave birth to America as we know it. Your history books will tell you America was founded by Europeans who came to the New World for a brighter future, free from religious persecution and oppression of the Old World. However, the New World, which was already inhabited by Native Americans, but more on that for a later video, was colonized for the sole purpose of creating wealth for Great Britain during their age of colonialism. The Americas were a land ripe with economic opportunity, in which these Europeans wanted to capitalize on this and make their fortune. And they went about this by using, well, human capital. Again, more on this in another video. The next thing you know, there was tea in the Boston Harbor, revolution was in the air, and Liberty Bells rang. The United States was born in the land of the free and the home of the brave, where all men were created equal, unless you were brown, a woman, or anything besides a Caucasian landowning male. Again, more on that in a later video.
Name of the game? Move the money from your client's pocket into your pocket.
Right, but if you can make a client's money at the same time, it's advantageous to everyone, correct?
No.
But here's the catch. Access to capital isn't evenly distributed, creating a playing field that's far from level. The American education system does a terrible job of explaining this to students. You could even go as far to say financial literacy is non-existent outside of higher education. Many individuals go their entire lives never understanding the basics of finances or how the financial system in their home country actually works. If you're looking to raise a population of financially literate and empowered citizens, you would look to fix this. However, if you wanted to raise a population that could be easily led and molded to be efficient employees and consumers, then you, my friend, are thinking like a true capitalist. Good for you. The monetary system acts as the lifeblood of capitalism, with banks and financial institutions deciding who gets capital and who doesn't. Those with more capital have better access to investment opportunities, leading to greater wealth accumulation over time. Meanwhile, those starting out with less find themselves in a perpetual game of catch-up, often hindered by high interest rates and barriers to entry. With this, it can go a step further. The US Federal Reserve, which isn't federally backed nor a bank, controls the lever to interest rates and monetary easing and tightening. When the government finds itself in a pickle, they ask the Fed to lower interest rates, making debt easy and begin pumping money into the market. However, when the Fed sees the economy running too hot and inflation is too high, they turn the money printers off, which raises interest rates, which makes debt more expensive, as well, leaving the populace to pay the bill for newly generated inflation. Now, if you're following me here, you're starting to see the threads connect. The US government picks and chooses when to turn the faucet on and off. In doing so, those with capital, well, those who already have access to capital, are in position to take advantage of each economic cycle.
The world economy is just one big casino, fueled by a giant debt bubble and computer-driven derivatives. There's only one thing better than being a gambler in a casino.
That's being the house.
That is right.
So imagine saving $1 today only to find out it buys less tomorrow. That, my friend, is inflation, gradually eating away at your purchasing power. While it's a natural part of economic cycles, its impact is in fact uneven. For the wealthy who can invest in assets like real estate or stocks, inflation poses little threat. Their investments often appreciate faster than the rate of inflation, safeguarding their wealth. As the Fed raises rates, those with capital on the sidelines can stash their money away in assets that store value like bonds, real estate, precious metals, or other alternative assets. Essentially, increased rates do little to them except push them to hold wealth on the sidelines to be deployed later. Now when the Fed drops rates, now the party truly begins. The capital floods the market, buying up assets once again and taking over the monopoly board. Up and down, in and out, over and over. Each time wealth is accumulated, stored, deployed, and accumulated again. Just like clockwork, all the while the general populace are stuck on the perpetual treadmill, barely holding on. For the average family, however, wages don't always keep pace with rising costs, squeezing budgets and making savings less effective. Over time, the value of their money saved under the mattress or in low interest rate accounts dwindles, while those with the means to invest see their fortunes flourish.
No, but you're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Well, your money's in Joe's house, that's right next to yours, and in the Kennedy house, and Mrs. Maitland's house, and 100 others.
Recessions, while challenging for economies, can be opportune moments for those with capital. The great financial crisis of 2008 demonstrated how wealth can shift during times of economic distress. As depicted in The Big Short, financial institutions pushed ninja loans, no job, no income, no assets, to applicants who, for the lack of better words, were unqualified to purchase the property from a financial standpoint. Realtors and bankers alike pushed these loans to get property into the hands of the less fortunate, or so they said. At the same time, these investors were packaging these subprime loans in the form of mortgage-backed securities. Investors sold these securities to one another for outrageous fees, raking in the profits while setting the stage for the entire house of cards to come tumbling down.
If we're right, people lose homes, people lose jobs, people lose retirement savings, people lose pensions. You know what I hate about banking? It reduces people to numbers. Here's a number, every 1% unemployment goes up, 40,000 people die. Did you know that?
The crash finally happened when rising interest rates and falling home prices strained the ability for borrowers to actually pay their mortgages. You see, these ninja loans were so attractive because they were sold as ARMs, or adjustable rate mortgages. So you could, in theory, purchase a home on the low and enjoy a nice cushy interest rate for a period of time. But what happens when rates rise and your 2% mortgage becomes a 6% mortgage? That, my friend, is catastrophe. And that's exactly what happened. Everything fell apart, layoffs came, foreclosures skyrocketed, and the Great Recession was in full swing by the time Obama took office. As property values plummeted and the stocks fell, those with liquid assets were able to buy at lows many could scarcely imagine. Imagine you worked your entire life to finally own a home, just for forces beyond your control to cause you to lose your job, your home, and your livelihood. Just for an opportune capitalist to buy your home off foreclosure, then rent it back to you. A classic capitalist move straight from the textbook. It doesn't get more American than that. This disparity isn't just about having wealth, but knowing how to leverage it. While many were tightening their belts, savvy investors were laying the groundwork for future prosperity. It's a stark reminder of how not only having capital preserves wealth, but can significantly multiply it during downturns. A reverse Robin Hood, stealing from the less fortunate and lining your own pockets.
Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
So, now that you're completely depressed, you're probably thinking, Mark, what can I possibly do to dig myself out of this hole and hop off the treadmill? How can I break free? How can I get my slice of the pie? How can I escape the matrix? Well, my weird traveler, you've made it this far into the video. You've probably more than likely hit the like button and subscribed already. So, you, my friend, have earned the right to an answer. Investing is the engine of wealth building in a capitalist economy. It's not just for the elite. It's a necessary strategy for anyone looking to grow their wealth over time. Investing in the stock market, real estate, or other assets, individuals can harness the power of economic growth, turning the tide in their favor. The evidence is clear. Families who invest, even modestly, in diversified portfolios often see their wealth grow exponentially over the years. The Federal Reserve study of consumer finances underscores this, showing a significant wealth disparity between investors and non-investors. It's a compelling argument for the democratization of investment knowledge and opportunities. The stock market isn't your only avenue to wealth generation. You can also use life insurance strategically in the form of an IUL policy to borrow against your policy and deploy this capital. The money can be deployed into avenues like a business, property, or other revenue generating opportunities. The bottom line is you're behind, and that's okay. You're green. You don't know anything because you've been kept in the dark for so long. It's understandable. The good news is you found Evergreen, and you decided to take the green pill and see just how far the rabbit hole truly goes. Well, if you made it this far, then you're just as frustrated as I was while writing the script for this video. The way Western capitalism is set up, it's meant for you to be frustrated and confused. You're not meant to have working knowledge of the system. You are meant to be a consumer and nothing more. However, you, my friend, have found Evergreen and are committed to growing your share of the pie. If you enjoyed this deep dive into capitalism, feel free to like the video for the YouTube algorithm. This lets us know you enjoy content like this and want to see more of it. As well, subscribe so you don't miss an upload. These videos do take time, but we aim to put out new content bi-weekly, mostly on Fridays. If you want to see more of us, follow us here on TikTok and Instagram so you don't miss out on new content. Now stay dangerous, and we'll see you in the next one.